Hey everybody, Chuck Barone. It is Monday, December the 11th, 2023. Huge week this week, guys. We got the Fed meeting. We got all kind of important jobs and inflation data coming. It's going to be a big week. Anyway, before I get rolling today, I'm going to take a half a second and welcome everybody to the show. And as always, thank you guys for your support. You guys hanging out with us, watching these videos means the world to us, guys. We appreciate you. All right, so let's talk about markets today. Not a lot of real data coming out today, so the market's having a happy day. I guess before we start getting anything coming in, market's betting that the news we're going to get this week is going to be good. So the markets across the board, the stock market at least today, rallies nicely. The Dow up 157 points, 36,404 on the Dow. The NASDAQ gains 28 points, 14,432 for the NASDAQ. The S&P up 18, 4,622 for the S&P 500. So that's a nice rally all the way across the board. A nice rally on the Dow. Stock's been hot, man. So market really now starting to place their bets that the worst of this inflation fight is over. We're actually going to get through this without a recession. I mean, these markets taking these assumptions like they're etched on, they're chiseled into stone here. I don't know. I still got my doubts about all this perfect scenario stuff and everything's going to go perfectly and end perfectly. And, where the hell on earth does that exist? Well, I haven't found it in my life, but I would like to have it. So if you guys know where perfection and everything goes wonderfully like that, where that is, please let me know in comments today, right? Bond market today, big nothing burger, nothing happening in bonds. Market waiting now, holding its breath. The 10-year just down 1 basis point, sitting at 4.24%. The 2-year also down 1 basis point, 4.72%. Nice quiet day. Big day with treasuries today, though. The U.S. government going to be selling quite a Brazilian dollars worth of bonds between now and Wednesday. Actually, over $300 billion worth. So we'll see if that has any kind of real unsettling effect on the bond market. Treasuries have been a problem lately. The dollar today is up very small, just basis points, but back above 104. 104.09 on the index. The dollar gaining now kind of turned itself around as gaining strength again. That's pretty surprising because the market pretty much has a 100% consensus that there won't be any more rate hikes. That's what gives the dollar additional strength. I think they kind of were pricing in rate cuts already, and that's why you saw the dollar declining down. Now they're hedging those bets. The cuts might not happen as fast as they think, so the dollar rallies a little bit. The dollar getting stronger, however, has not been good for gold and silver, man. Gold getting beat up again today. Gold falling $23.40, sitting at $1,981.10 for an ounce of gold. Silver down 15 cents, $22.82 for an ounce of silver. These are still good, strong numbers, but just not compared to the recent highs. I thought gold was going to be staying above 2,000, but I know that there's a lot of factors that weigh into the price of gold, especially when it's breaking past milestones like 2,000 per ounce. Not only do you have profit taking by guys who've been holding gold for a long, long time. You got institutional trading in there, and you got the cartel on Wall Street wanting to suppress gold prices and keep gold down, because when gold starts really soaring, that tips everybody's hand on where inflation really is, right? So gold and silver having a little bit of a setback over the past few days, coming down off real highs, especially gold, but still strength in there. I'm telling you guys, these indexes, these numbers are going to seem like a bargain once this dollar comes back down. Imagine the dollar at 100 level, which is still really strong for the dollar. You're going to see gold and silver much higher than they are today. Oil today up small pennies, sitting at $71.47 for a barrel of West Texas Intermediate. It's right in that trough where we kind of been predicting it's going to be. I think, again, you might see these breakouts above 75 or below 70. They're usually very, very short term. Oil still, the price holding strong, even though the producer is doing everything they can to try to get that price up a little bit. Not happening. So gold or oil now sitting in that 70 to 75 trough where we believe it's going to stay for a while. Bitcoin today selling off big time, down $3,073. Now sitting at $40,943, still a very strong number. This is, I'm guessing, nothing more than straight up profit taking. The guys who had the balls to buy Bitcoin at 16K, probably taking a little bit of money off the table here. We know this is a big week. Bitcoin has been susceptible to inflation stuff. So we'll see where it goes, but I still am super impressed by this rally. These little bit of setbacks coming back down, okay, so be it. Still above 40,000, an outstanding strong number for Bitcoin. All right, like I do every day, or every Monday, I should say, talk about what we're going to be dealing with this week, the data that's coming that's been reported, how it could affect us, how it could affect our portfolios in these markets. Today, a quiet day, not really much coming, and that's okay. We need that to kind of gather ourselves for this big onslaught because this week is going to be a big one. All right, so starting tomorrow, check it out. Starting tomorrow, the Fed meets. They start their open market committee meeting. This meeting will end on Wednesday. They're expected to hold their rate policy steady, no increases, no cuts. We'll see how that comes. If that's the case, and it certainly seems to be the overwhelming consensus is that the Fed will hold pat. All the attention then will turn to Powell, what he's got to say at his presser, and then the rest of the talking heads will be out the next couple of days after. So we'll get an idea of what the Fed's seeing, where they believe rates are going. Also on Tuesday, we will get our CPI numbers, and those are expected to, here's what they're expecting. Top line CPI to come in at 3%. That would be down from 3.2% last month. And they're expecting core to remain the same, core to sit at 4%, exactly where it was the last time they reported last month. So, if those numbers come in like that, the market's going to celebrate like crazy, saying, "Yay! Look, we've done our job. It's time for cuts." And you really think 50% higher than target is something to celebrate? You think 100% higher than target is something to celebrate? Because if the numbers come in where they're praying they do, that's what we're dealing with. Core is the indicator. Core telling you where prices are going. Another 4% increase, really? Wow, the Fed's doing their job. Great. And now, so we'll see where CPI comes in. I'm sure that number, the Fed will know before Tuesday, obviously, but I'm sure that number will have an effect on what comes on Wednesday. Also on Tuesday, we'll get the budget deficit info. The government is projected to run a $250 billion deficit just this month. $249 billion last month. We're talking half a frickin' $1 trillion in 2 months. Hey, Feds. All right, so that's Tuesday. Wednesday, the Fed meeting will end. We'll get Powell. Wednesday morning, we'll get our PPI numbers. Now, that's the producer price index. That's the tip-off to where we're going to be with CPI down the road a little ways. And both of those numbers are expected to be higher than they were last month. So PPI is going to be the one this month. Let's see where it comes. Also, we'll get mortgage bankers info, which will show that the mortgage business is basically, still holding its breath, turning blue, waiting for rates to come down a little bit. On Thursday, market will be digesting everything that happened on Wednesday with the Fed and those inflation numbers. We'll still get a ton of data. On Thursday, we'll get jobless claims. Expected to come in at 220,000, exactly where they came last week. We'll get retail sales numbers, which are expected to be down. We'll get business inventory numbers, which are expected to be up. And we'll also get import prices, which have been coming down pretty steadily, expected to continue coming down. On Friday, we'll get the Empire Manufacturing Index, capacity utilization, and industrial production. So we'll get an idea of where the industrial state of the United States is, its manufacturing base is, with all the data that comes on Friday. So all of this stuff is going to lead to a wild and crazy week this week, guys. We'll see if, if the numbers come in as they hope. Maybe it could be a nice, easy week. Markets rally, bond yields come down. I think it's wishful thinking, but we'll see. We're going to follow it. We're going to be here to bring you guys the news. All right, one quick thing before we go today. U.S. Treasury auctions, guys. You guys reading about this at all? U.S. Treasury auctions getting to be a little bit scary now. In this bond market, Treasuries are expected to be just like the second they sell them, they release them, I should say, or announce an auction, the primary dealers start taking orders, and bada boom. Usually these auctions they're sold out pretty quickly. If dealers have to buy bonds, that's usually not a good sign. They had to buy almost 25% of the last auction, so some scary stuff happening. What happens if the Treasury decides they want to auction off a couple $100 billion worth of T-bonds or T-bills or notes or whatevers, and nobody cares, nobody shows up? Now, again, these bond auctions used to be pretty routine, but no more. These auctions have grown in size. They said that in 2024, next year, bond auctions will be 23% bigger than they were this year. Guys, something's got to be done about this debt now. Now we're getting to the point where we're taking on debt to pay interest on existing debt. That's the fast track to bankruptcy. 1/3 of all U.S. debt is set to mature this year, so they're going to have to auction all of it. Every bit of it needs to be refinanced, as well as $5.2 billion in additional debt that the government is creating every single day. $5.2 billion every day. Breaking it down even further, the government is borrowing $218 million every hour, every day, every week, every month. The government just going crazy, wild, reckless. Now we're getting to reckless spending. It does that number, they're expecting the treasuries to be selling that much or higher for the next 10 years. They're talking about $2 trillion annual deficits. Can't happen, guys. Now this is getting to be really just way out of line now. Interest payments on our debt now totaling more than $2 billion freaking dollars every single day. $2 billion a day. $2 billion a day. The government now paying more on interest on debt than on defense. So these interest payments are soon to be the largest expenditure in our government's budget every single year. $20.8 trillion of new treasuries this year they're expecting. $20.8 trillion. Where's that money coming from? Where does that much money even exist, man? It is just out of control. Crazy. Just this week, between today and Wednesday, today, tomorrow, Wednesday, $325 billion. Scary stuff, guys. Forget inflation, forget everything else. If the government debt bubble pops, well, that's going to be big news. The biggest news. Anyway, I don't mean to be a Charlie negative. That's it for the day. Hopefully tomorrow will bring us some good news and I can be Charlie smiling. Look how good things are going. I hope so. As always, guys, we appreciate your support. We'll be back tomorrow to bring you guys the news you need. We'll see what Powell's up to. We'll get CPI. Till tomorrow, guys. Take care. Thanks.